Welcome. In this video, ZBCN coin falling trend broken. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. The downward trend line, which I had previously highlighted on the chart and under which the price had been trading for a long time, has finally been broken to the upside with strong momentum. This breakout should be considered a very positive development from a technical analysis perspective. Downward trend lines generally indicate that selling pressure continues in the market, and as long as the price remains below such lines, investors tend to act cautiously. However, breaking above this line signals that the current downward pressure is weakening, and a shift toward buying momentum has begun in the market. Currently, it is observed that the price, after breaking this significant trend line, is pulling back toward the line. This technical move is referred to as a retest in the markets, and is actually one of the essential components of a healthy uptrend. Because when the price tests this trend line, previously acting as resistance, as support, it reinforces buying confidence. During this process, it is expected that buyers will re-enter at this level, and the price will continue its upward movement. Trend breakouts are always considered important reversal signals in the markets. Especially the breakout of a long-standing downward trend can indicate the beginning of an upward movement in the medium to long term. The pullback and retest process following such a breakout serve both as confirmation for investors and as a strong buying opportunity. A new low formed at this point confirms that the previous resistance area is now functioning as support. The price breaking above this downward trend line carries significant psychological meaning as well, not just technical. It shows that investors are no longer succumbing to selling pressure and are beginning to act with a buying intention. This implies that risk appetite in the markets is increasing, and the foundation for a stronger uptrend is being laid. The fact that the price has begun a retest shortly after the breakout indicates that the upward momentum is continuing with determination. During the retest process, a temporary drop in volume can often be observed, which indicates that the market is in a waiting phase before recovering again. However, such pullbacks provide an ideal setup for new buyers to step in. If the price manages to hold above this trend line and makes another upward move, it would confirm the breakout and signal a confirmed uptrend. This serves as a strong buy signal for investors. In technical analysis, trend breakouts and subsequent retests are among the most important indicators of trend reversals. Especially when downward trends are broken to the upside, it shows that the control has shifted from sellers to buyers. The formation of such structures indicates that the upward movement is not merely a short-term reaction, but one that can continue over broader time frames. Once the retest is complete and the price turns upward again, it is generally expected to target the previous high. From a charting perspective, if the price successfully completes this retest, it is quite likely that the resistance levels formed during the previous decline will be surpassed one by one. Because the broken downward trend line now becomes a support zone, and this support level can be strongly defended by buyers. This allows the price to continue its upward movement on a more solid foundation. For investors, such retest processes are a perfect time to avoid acting hastily and to wait for the market to confirm its direction. If the price bounces off this support level and initiates another upward move, it indicates that the trend reversal is complete and a new upward wave has begun. But of course, we can't base our analysis solely on trend lines. Let's also look at other metrics. Stay tuned. When analyzed on the chart, a structure that is quite meaningful and promising within the context of the Elliott wave theory is forming. The current market movements are displaying a classic example of the Elliott wave pattern, and technical data especially indicates that the fourth corrective wave is nearing completion. With the end of this wave, the market may now be preparing to enter the fifth and final impulse wave. This transition is often known as a period of great opportunity for investors, as the fifth wave typically brings strong and accelerated upward movements. The fourth wave can generally be defined as a short-term consolidation phase in the market. During this phase, investors digest the previous uptrend and a new equilibrium is established in the market. The fifth wave that follows this consolidation usually provides momentum in which buyers regain strength and prices not only test previous highs, but can also surpass them. The fact that the current price structure supports this expectation is a highly positive development from a market psychology standpoint. The fifth wave in Elliott wave theory is often projected in proportion to the height of the third wave. In this context, if the third wave in the current structure has shown a strong and clear upward movement, it is expected that the fifth wave will at least match it in magnitude. Technical analysis principles suggest that this wave should, at a minimum, reach the end level of the third wave. This indicates that the current price level potentially holds a significant upward momentum. The price action we are currently observing signals that the fourth wave is gradually completing and that buying pressure is beginning to increase again. While the fourth wave is typically characterized by complex and sideways movements, the current formation is progressing with a simpler and clearer corrective structure. This suggests that the transition to the fifth wave could be smoother and the upward movement could happen more rapidly. If this transition unfolds as expected, a renewed upward momentum in prices could boost investor confidence and lead to a notable increase in trading volume. Additionally, with the start of the fifth wave, external factors such as positive news flow, social media influence, and increased investor interest could also support the rise. This helps shape the uptrend on a stronger foundation at the intersection of technical and fundamental analysis. The fifth wave is not only significant technically, but also psychologically, as it revitalizes investor optimism. Many investors who may have missed the third wave often see the fifth wave as their chance to participate in the final major move of the trend. Looking at market history, we can see that many major uptrends occurred during fifth waves. These periods are often those long-awaited opportunity phases for many investors involved in technical analysis. Especially in scenarios where the third wave was strong, the fifth wave has also brought significant price increases. Therefore, the current structure can be interpreted as a strong signal that positive expectations are resurfacing for investors and that potential gains may be on the horizon. In conclusion, the current Elliott wave structure is sending highly positive signals from a technical analysis standpoint. The fourth wave is nearing its end, and the market is getting ready to move into the fifth wave. This wave is typically expected to reach the level of the third wave, and if the price structure continues in this direction and starts testing previous highs, the likelihood of a profitable period for investors in both the short and medium term will increase. In this context, the technical outlook is promising, and there are positive expectations for the continuation of the uptrend. When the technical indicators on the chart are analyzed, it is clearly observed that the Bollinger Bands have become quite narrow in the current situation. This tightening is considered to be a classic pattern that is frequently seen in technical analysis literature and is a precursor to significant price movements. This narrowing of the Bollinger Bands shows us that the market is going through an extremely stagnant period and that a strong directional breakout is highly likely to follow this stagnation. This technical pattern signals the beginning of a sharp price move, often referred to as a volatility breakout. A Bollinger Band squeeze occurs when the market is trying to stabilize for a period of time. Traders are indecisive and volumes are low. During such periods, price action is compressed into a narrow range and the bands converge. Historically, however, these situations often occur ahead of large and influential price movements. In this context, the current Bollinger Band structure gives a very strong signal that price will soon break out in a significant direction. The fact that the current bandwidth is so narrow suggests that there is energy trapped in the market and that this energy will soon be released. We can follow the squeezes with these bands. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.